Good afternoon. I hope you're having a good start to your weekend. I'm just sending you a quick video in relation to a conversation that Carl and I were having over Messenger. I also brought it up the day I met you, and that was building a community between us. And the bigger the community gets, the better, where we can all give each other signals and concentrate on our own pairs. So I just wanted to touch on that because if you're trading other pairs, it's similar to trading gold US dollar. What I mean by that is it doesn't matter what pairs you're looking at. So what I mean is if it's Great British Pound US dollar, or it's Euros US dollar, or it could be US dollar Canadian dollar. You're keeping you're keeping an eye on US dollar Japanese yen. The reason is because US dollar is like the largest traded currency in the world. So taking that into account, that has a big influence on everything else. I'll give you an example. Weekly chart. Weekly chart, the last 2 weeks US dollar has been on a bull run. So what's happened to Great British Pound US dollar? It's come down. Not much, but it's come down. Euros US dollar. It's come down. I'll put in, because US dollar JPY, US dollar has gone up, which it would do, you would expect it to. Let's look at another one. Australian dollar against US dollar. So US dollar is going up, Australian dollar is going down. New Zealand dollar, let's just quickly look at New Zealand dollar. So you get the picture. You get the picture. The fact that if US dollar is going up, then you know that all of the others will be going down. It's the same for Japanese yen, so you can see they're going down. So if you see US dollar going down, then these pairs will start going back up again. And this is how you get the waves. You're getting the waves because US dollar will hit a strong support, so then it'll start coming down. So then all of a sudden New Zealand dollar will start going up. And that's how you get the waves and patterns in the market. And obviously, certain currencies will be stronger than others. That's something to take account of as well. But also the same with Japanese yen. So Japanese yen, we know that Japanese yen's like a safe haven, like gold. So if the market is against risk, you'll see Japanese yen will go up where US dollar will go down. If you see Japanese yen getting weaker and US dollar going up, what it means for, say, Great British Pound is that's going to become stronger against Japanese yen as well, because Japanese yen is becoming weaker. So you can see here, if I look on a weekly chart, Great British Pound, it doesn't matter what it's doing with US dollar, the fact that Japanese yen is going down, Great British Pound is going up. Which other one have I got up here, which is Japanese yen? Let's find another currency, Japanese yen. So Japanese yen, New Zealand dollar, Japanese yen on a weekly chart. It's been going up. So this is something to be aware of. It's exactly the same as trading gold against US dollar. If you're trading, whether it's Great British Pound, Euros, Australian dollar, New Zealand dollar, if you're trading any of those, keep an eye on US dollar JPY, exactly the same. But what I would suggest is if we're going to be sending each other signals, send each other the cherry picking signals. So that means that if we are going to be trading other pairs during the day, we're trading cherry picked trades from each other. So we are keeping each other safe. So when I talk about cherry picking, I mentioned last week that just on this candle here, on gold US dollar. I was going short, I went short, I made profit. I'm still looking at that. I'm still looking to go short. I still think that's kind of a cherry pick setup. Obviously, I'll be keeping an eye on strong supports and strong resistances. But it's just the same with any other pair you look at, whether it's New Zealand dollar, you've got your cherry pick. So here, here, round about here, you'll have your cherry pick sessions here that you know. And what you can do if you want, I wouldn't trade less than an hour. I mean, you can trade off any chart. You've just got to be so careful on a 30-minute chart and an hour chart and make sure you are trading with a trend. Otherwise, you will get caught out. Even if you're cherry picking, you're going to get caught out. So here, that would have been a nice cherry pick one on an hour chart. And you would have got 75 pips out of it. So let's just put a line. Where's that stopping on a higher chart? So on a higher chart, that is stopping up here. So let's just put in the entry. Where was the entry? The entry was here. So let's see that on a 4-hour chart. So you're trading on a shorter chart. So the entry would have been here. So if you're looking at the hour chart, if you're looking at the 4-hour chart, I would take a count. 14th of January, 8 o'clock. So that there, oh, that's the 8th, oh, here. 14th of January. So it must be one of these candles here. So how many pips is up there? 75 pips. So that must be roughly about the same, because it was about 75 pips, wasn't it? Yeah. So that's the trading range you had with that. When it went way through the Bollinger Band. So you were cherry picking, and you could have had a nice trade up there. So the point I'm getting at is on a shorter time frame, it's riskier. You got more chance of being caught out. So always make sure you're checking the longer time frames, so that if you are cherry picking, you know you're heading in the right direction. So if you were looking at this here, you could have been saying, well, if the hour one and the 4-hour they're both going to be going on a bull run, then you feel quite safe going at that bull run. What's it on a? Yeah, it's above the 8 moving average on a 12-hour chart. So you would have felt comfortable going on a bull run there. On a daily chart, maybe it's entering here, so probably finished here on the daily chart. Is that? No, it won't be. Here, 14. Where were we? Yeah. So it would have been this one here. So that's a nice rejection candle. So nice rejection candle. So then you would assume, yeah, it's going to go up. So the point I'm getting at is, yes, you can do trades on a shorter time frame. Just be careful. Just check all the other charts, just to make sure nothing is going to catch you out. Keep each other safe. But as a suggestion, come back with suggestions how you would like to choose other pairs. Do you want to choose in your own group? Do you want to wait until I'm up in early February? Because I understand you want me up there for early February. Then we all just discuss which pairs we'll focus on each. And then we can start giving each other signals. So let me know what you think. And just to summarize, just be aware that doesn't matter what pair you're looking at, keep an eye on US dollar JPY. That will have an influence on what pair you're looking at if it's traded against US dollar or JPY. So in a nutshell, that's what a gauge is. It's exactly the same as trading gold. So I hope you found this a little bit beneficial. I just wanted to throw that in just so you're aware of it. It's going to be no different trading others if you're just keeping an eye on US dollar JPY, exactly the same. You're just trading GBP or you're just trading New Zealand dollar or euros or whatever. So have a good Saturday. If there's anything else you'd like a video on, anything else you'd like help on, any questions you've got today while you're in your session, kindly just let me know. I'm there for you. Okay, have a great weekend. Catch you next week. Bye for now.